up, we have David MacMillan, who's the CEO of Deveron. Deveron's listed on the Venture Exchange with the ticker FARM. Deveron's an ag tech company that uses data and insights to help farmers and large agriculture enterprises increase yields, reduce costs, and improve farm outcomes. The company also recently launched a carbon platform that's seeing very significant early success. So thanks, Dave, for being here. Congrats on all the success that you've had so far. Great. Looking forward to hearing your presentation.
Thanks, Tina. Thanks for organizing this. There's like 2 people in Canada that are doing a good job exposing the sector, and you guys are one of them. So thank you for that.
Appreciate it.
Thank you, everyone, for taking the time to learn a little bit about our company here at Deveron and the greater, Canadian ecosystem for agriculture technology. I think it's one of the most untapped, industries from a public side. Obviously, over the last 4 or 5 years, we've seen, $100 billion privately go into ag tech at a minimum. So we think it's a great place for public investors to get some exposure. So as Tina said, Deveron's an agriculture technology company. We're focused on 2 main things. One, we've got a network across North America that is aggregating data across farms directly at the farm gate. And then this service business is really feeding information into our platform that we continue to develop out, where we see a whole bunch of upside in different forms of data monetization, which I'll walk through today. So just from a very high level, some investment highlights from Deveron's perspective is we have this really interesting flywheel model where we're out in farms collecting data. That data is then going into our ecosystem. It's helping our farmers make better decisions, whether it be through better input application, visualization of their information to make better production decisions. And then that's leading to wins. And these wins lead to, hey, we should get more data on our farm. So I think, we have this really great scalable, kind of idea that we've seen, especially over the last 12 months, really starting to take impact. And as I walk you through a little bit of the financial performance of Deveron, I think you can see that our value proposition has really been figured out. And it's now a question of, not if, but how fast we can continue to grow. In August, we completed an $8 million private placement. So today the company has, give or take $9 million on the balance sheet. So we're really well funded to keep focusing on our growth strategy, which I'll walk you through today. Uniquely to agriculture, as a tech company, obviously everyone's in search of ARR and recurring revenue. And I think there's this great divide that companies are trying to figure out, in some ways, the best way to drive recurring revenue. And for us, the metric we're still looking at is this retention rate. And we see over time that basically 90% of our customer base is coming back year over year, which is leading to this really strong recurring revenue that we see across our products. And if you look through the last 2 to 3 years of what Deveron's been building, you can see this movement into a higher margin digital insight business. So again, what started off as a service company collecting data on behalf of farmers and large agriculture companies across North America has really turned into the collection and management of data is really underlying this technology envelope that sits on top of it, where we're driving more and more repeat high margin digital analytics sales. And on the growth side, we have a really strong organic channel that's based in Kansas City. So these are our salespeople that are out in the field selling our core business. But at the same time, there's this really unique opportunity in agriculture of what's called independent agronomists. And these are people that, traditionally are analog professional service providers to farmers and helping them make decisions that we've started to consolidate. So, in your traditional kind of roll-up model, we're buying these businesses, which is giving us influence at the local farm level. And it's allowing us to really have a soapbox to sell our software services through. So no longer are we cut with that bottleneck of relationship building that's traditionally been very important in agriculture. We can go into Iowa through acquisition and leverage the relationships of our partners, as opposed to setting up a new entity and trying to really drive over 2 or 3 years trust within those markets. And just to cap it off, as Tina mentioned, in the last, 2 months, we've launched a carbon service platform that's really, blowing us away on the growth side. So in agriculture, it's one of the largest markets for carbon credits to be created. We're working with over $200 billion in market cap and helping them roll out their carbon programs across the United States and Canada. And I'll get into a bit more details on that and where we see so much upside moving forward. So if you're investing in Deveron, you're really thinking about the value of agricultural data and the value that a new company outside of the traditional fertilizer dealers or traditional input companies in kind of monetizing this data, but also providing a very independent perspective on it. So we here at Deveron, we do not sell inputs. We will never sell fertilizer. We won't sell crop protection. We sell data services that help manage these products. And these products are of the highest cost for any operating line within any farm in North America. So we're really excited about the growth of data and the opportunity to, again, provide this value proposition down to the farmer who, even in this year, we've seen fertilizer prices triple to the historical high that's never been seen before. And all of our customers are coming to us and saying, hey, how can we manage this this increased pricing better and better? So here's our footprint today from a traditional service perspective. So we have over 115 data technicians across North America that are on demand, able to collect data for farms. And in some ways, we like to liken it to almost an Uber of agriculture or a TaskRabbit of agriculture. So you have these new platform companies that have built a really strong technology to move people around efficiently. And we're finding there's a big gap in agriculture that we've been able to serve. And as early as 3 years ago, the company really only had 3 to 5 technicians in each market. So we're starting to grow that, and obviously, our revenue is catching up to it. And we think just investing in the last mile in agriculture is much like Amazon did in the delivery space. We believe that opportunity exists in ag. And then once we collect this data, it's, to me, the value add of what we can do next is really exciting. And so helping people collect better soil data and then making recommendations on how better to manage their farm is really key to what we think about doing as we move forward. And being focused on soil data and all that you can do with it, you start thinking about how that will influence carbon markets, how that influences fertilizer pricing and supply and demand of needed fertilizer on farms. And there's just been this historical trend of over application in agriculture where folks don't know, in these specific areas of our farm, why should I be applying the same amount of nitrogen, the same amount of potash? And our data really helps these people decide, from a perspective of investment, if I apply another 100 tons of fertilizer, am I going to get a return? And that's completely what our platform is doing. So from an end-to-end perspective, we're collecting data at low cost, we're digitizing it, getting it into the cloud so it can be managed. And then so our customers can buy independent analysis for each of these decisions that they do. So whether you're new to agriculture or you're deep into it, I think a really great benchmark for Deveron today is our acres under management. And we're really driving this growth in 2 ways. One, as I mentioned, we have a sales team that's based in Kansas City. So that group is going out, we're approaching enterprises, they're signing some of these new deals that you've seen from us on the carbon side. We're working with ag retailer to grow the channel, but then we're also increasing our acres through acquisition. So I think this is a really exciting growth channel for us. As I mentioned at the beginning of the presentation, we've acquired 5 companies to date this year, and actually over $5 million in run rate revenue through this model. So, the beginning of the end of 2020, we touched about 1 million acres digitally and physically that we influenced. Today, we touch over 6 million. So we're starting to see that sort of exponential scale. And it's really being driven by these 2 factors of organic growth and acquisitive growth. It's a very high level. You can think of Deveron in these 2 kind of pipelines today. One is obviously on the data collection side, where we average on a revenue per acre basis of about $7. On the insight basis, as people flow through the channel, it's about a $12 opportunity. And then what we do have is this full farm advisory product where customers are starting to not only buy data collection services, but they're buying interpretation services. And the agronomists that we acquire in general are providing these kind of year-over-year subscription services to their customers at about a $20 an acre market. So when you think about the different value per acre and you think that in North America, there's 1 billion with a B acres of farmland under management. I think the total addressable market is really large, and we're just starting to scratch the surface in terms of our penetration. And as you can expect, field services, traditional service work, getting out to the field, it still has a nice gross margin, but the focus on the company is continue to drive this digitization and revenue that leads or comes from our higher margin product portfolio. And so as you see, when we move through the value chain, the margins have quite a significant opportunity to drive forward. And I think you can see that in our financial statements. We're starting to really improve our margins as we have more and more customers convert into this digital insight side of things. So here's our growth to date. 2017 and 2018, really figuring out what our value proposition would be. Started to get into data in 2019 outside of the service side. And then we acquired our first local agronomy company in Texas last year. And then from that, we've raised about $14 million in the last 9 months. And we've really tried to accelerate what we've been doing. And that's led now to, as I say, about a run rate of $10.5 million. We've got almost 6 million acres under management, and we have local amazing partners whose P&L that we own that we're managing as sort of like investors moving forward. And like the great thing about this kind of consolidation model that I think is different than maybe other like dental practice roll-ups, funeral home roll-ups as such, once we buy these businesses, we're starting to see 30% organic growth post-acquisition. So our VP product is an ex-McKinsey consultant, and he's really focused on like the post-acquisition playbook. And I think now that we've got a year under our belt of a lot of these businesses, we think there's an amazing amount of scale where we focus at Deveron Corp at building great software, building great solutions that these folks can bring out to their local customer base to drive revenue growth. And obviously being part of that and owning the P&L is a really powerful financial model. So if you don't know anything about ag, or you're wondering, well, what does this market look like, especially from the consolidation side, we think it's really exciting. So there's over 150 independent soil labs, and these are companies that traditionally, they actually analyze the dirt that comes out of the ground. So as you can envision Deveron collecting more and more of agriculture soil, historically, we maybe get paid $1 to collect it, and the labs make $1.50 to analyze it. We acquired our first lab in May of this year, and I think there's a huge runway to accelerate this side of the business. Labs in the US do anywhere from $2 to $40 million a year in revenue. So I think there's a nice stepping stone again as the market cap of Deveron grows, which is going to allow us to continue to escalate our ability to acquire higher revenue businesses. And then on the agronomist side, again, there's 15,000 of these businesses. On average, they do about $1 million a year. They're 20% EBITDA margin. And we think that this is not only a great way to get local representation and new customers in regions where you might expect us to take 3 or 5 years to build up credibility, we instantly get, and then again, we can help these businesses grow over time. So just, we've like press released a lot of these multiples, but I think this is another side that for me, that's highly accretive. These are professional service businesses that are traditionally very analog. So they trade at, or they're available for anywhere from kind of 1 to 2 times revenue, 3 to 4 times EBITDA is generally the norm. One of our acquisitions was a little bit higher, but it also came with $1 million of capital equipment. So, in a general sense, we're targeting that 3 to 4 times EBITDA. And the way we've structured most of these deals is kind of 50% cash, 50% equity. And it's over a 3-year period. So in general, you can buy $1 million of revenue in the agriculture professional services business for $150,000 cash down. And then next year's payout is usually paid for through their own operating cash flow. So from my side, we're trying to really address this. We've got about $38 million in pipeline revenue. We have 3 LOIs that are out right now that we hope to kind of get completed. And I think there's just a massive amount of growth from this side. But also, once these businesses get integrated, they're very core into what we do already. And again, we think we can grow these businesses post-acquisition 20 to 30% a year moving forward. So that brings me to ESG and carbon. Hopefully, most of you on the call have heard lots about carbon credits and how exciting that space is. And for us, like, we're really focused on the agricultural side. And I think what's unique about it is we have three strategic ways to play it. The first is through, kind of the pick and shovel of large enterprises. So as I mentioned, we've signed almost $6 million in recurring revenue deals over the next 3 or 4 years with the United States Department of Agriculture, Bayer Crop Science, Corteva, some of the biggest companies on the planet. And at the same time, we also have 6 million acres of users that want carbon credit solutions. So whether Deveron has an opportunity to become a marketplace maker or also create credits ourselves on behalf of our customers and then sell them to an end buyer, we think that this is like a really interesting pace for us to play. But at the same time, it's just core to what we do. We collect soil data and we digitize it. And so it's not something like a grab of left field. We just think it's great optionality as we move ahead. When you think about our model, this is in effect all those moving parts coming together. Farmdog is the software we acquired back in February, and it acts as like the central data storage hub for everything that happens in this company. And whether it's our organic sales team that's selling new ideas or it's our acquired companies, they all integrate through the central system, which becomes a data warehouse. And today, as I've mentioned, we have a run rate of roughly $10.5 million on data collection, data services, and carbon. But you can imagine a day where we also launch products around data aggregation, improve financial lending. There's all sorts of information that we think is going to help productize this company moving forward and continue to drive an ability to scale revenue. And this isn't something that we started yesterday. I founded the company about 5 years ago, and like this credibility over time has allowed us to work with some of the largest companies on the planet. We have integration on the digital side with John Deere, with Bayer Crop Science, who again touch hundreds of millions of acres globally, which eventually become potential customers for Deveron. So at our core, I mentioned, is our Farmdog software. This is something that any of you could download from the iOS store or Android. It's really one of the leading mobile applications in agriculture that people can use to log field data. And again, it's a central hub or data visualization tool for a lot of our customers. And when we purchased this business, not only did we get an amazing VP product who's an ex-McKinsey consultant, now leading our product journey, we also acquired a large number of users, a great number of acres under management, and a place for us to upsell our core services that we're already monetizing today. And so I think as you look at our roadmap over the next 2 to 3 years, you can think about this broad acre base that we influence and our ability to continue to sell more digital products through our Farmdog ecosystem, which will lead to more and more revenue growth. My background, mostly Canadian public markets, spent the last 10 years helping small companies figure out product market fit and growing them. Our VP of sales is ex-US military, grew up on a farm in Illinois, is the quintessential person you need to be successful in US agriculture. Laurent Brish, I mentioned, came over from Farmdog, ex-McKinsey, a consultant who spent 15 years in sort of the VC world. Both Mike and Aaron have spent combined 40 years selling fertilizer in Canada and realized how broken the world is. So are here now thinking about these ideas around, not being an input first company, but being an insights first company. And then to round it off, we have a VP engineering who's had a successful exit from a private company here in Canada. And Craig, our VP of finance, has worked for all sorts of different healthcare roll-ups, Celestica, and large public companies here in Canada. On the board side, Bill Linton is the ex-CFO of Rogers Communication, has been a very prominent venture investor in technology here in Canada. He's also the chairman of SoftChoice before it was originally bought by Birch Hill prior to it, or previous to its recent IPO. So Bill's been a great person that's really, mentored us as a company in moving forward on the product side. And many of you on this call probably know Roger Dent from the Canadian public markets. So great to have Roger here, kind of guide us through the crazy world of small cap investing. And then the last person I'll highlight is our recent board addition from this summer is Joelle Faulkner. So Joelle runs about $700 million private equity fund that invests in agricultural farmland here in Canada. She's a Rhodes Scholar, grew up on a dairy farm in London, Ontario, and has really been great perspective for us as we continue to build out our product market fit. So here's a picture of the company and I guess sort of what we delivered on. And as I say, when you start to think about next year, we can continue to buy these companies given our cash balance sheet, and we're going to continue to drive organic growth, which, quarterly we've been sort of printing, anywhere from 50 to 100% revenue growth quarter or year over year. So I think that trend is not going to really settle down as we keep executing on what we think is a really strong value proposition. And the one thing I'll point out, though, is that at the end of last year, our revenue split was about 70-30 Canada US. At the end of this year, it'll probably be 60% US business and 40% Canadian. So we really are becoming a North American player, but we're really starting to have a bias, and we're over-indexed into the US market. Share structure stuff, 88 million shares out. As I said, the last round that we did was at 65 cents. There's some 85-cent warrants in from that. We raised 8.5 million or so, mostly kind of retail, but strategic retail. There's really 8 or 9 investment advisors who have backed this company since the early days and have invested in almost every round that we've done. And our management directors and Bill's group, technology investment group, they actually own today now, I think it's about 23%. I need to update that. So really great shareholder base that we continue to execute on moving forward. And we believe that, again, this was a kind of a come out year in terms of Deveron's execution. And we're hoping that next year, with continued institutional interest in what we're doing, we'll drive the stock to new highs as we execute on this growth plan that we have moving forward. So with that, thanks very much. Our emails and phone numbers are there for myself or Phil, and happy to answer any questions that come up.
Thanks, Dave. So we've got a couple of questions for the audience, but first of all, I guess I wanted to start with the genesis of the carbon services platform, because you obviously announced this in September. You've signed multiple agreements since then, including with the Department of Agriculture. So it's pretty quick ramp up, I guess. I'm curious to know if that platform was a result, I guess, of inbound requests, or how did this all come together so quickly?
Yeah, we've been working with some large groups that have raised significant venture capital over the last 24 months that we're talking about carbon, and there's sort of two views of it, I guess, in agriculture. You can either have a high value carbon credit that uses high fidelity soil data from specific farms, or you use satellite technology to try to come up with some algorithm. And our view is that high value credits will require soil data. And the companies we were working with were saying the same thing. And as they started to get more of a mandate from their growers to have interest, they came to us and said, look, we're going to need data across 20 states. You're the only company organized to even do this. Are you interested? So we started doing these proof of concepts, and it became very clear to us that no one really wanted to shepherd the movement of the information. Everyone was very concerned about, I'm going to do magical AI and machine learning. And for us, it's look, let's just connect the pipes. How do you digitize this field data, scale at a reasonable cost, and get it API'd into these giant mega companies' backend systems? And so that's kind of where it started. And, the work we've done with Bayer, it was $50,000 proof of concept this spring. They had such great responses to it and said, this is the way we scale. And, came back with this 4-year agreement with an initial $3 million commitment. And that's just, now that we're out there, we're almost this de facto connector. So, the Cargills of the world call us, and we're excited about starting to market it, because it's just really been it's a true test of technology becoming an MVP, user feedback, and okay, we'll build a platform around it because there is this product market fit.
Yeah, and obviously getting in with some of these customers, you have the ability to cross-sell other products, and that's really valuable for the company.
And not only that, I mean, you think about a Bayer, for example, touches probably 150 million acres of customers, and the customers we're working with today that want carbon, they're all going to want it. So to me, it's if it works, it's going to work in a big way because we're already the choice, and there's nobody else that's going to usurp us in the next 4 years. So we're kind of now just hoping they continue to see success with their macro kind of idea on it all.
And how's the pipeline looking for that side of the business? Obviously, it's early and it seems like it's been ramping up quickly. Are you expecting that ramp to continue?
Yeah, I think so. Like I mean, it's funny. Nothing's ever fast enough, but we announced another smaller, like $100,000 contract. I think it was last week, and someone texted me like, "Well, that's a bit of it's a small number. Like, why even bother?" And it's like, look, this is like one of the largest private companies on the planet, and if they go all in on this, it will be big. But it's just agriculture happens in a different time frame than I think traditional small cap investors want. So from that side, it's like we're working with most of the large companies that have programs. And I think that as they start to get demand downstream from the institutional buyer that wants credits, that goes directly to us because there's more service need and there's more digitization need. And what can I speak to today is like the Bayer deal is already like it doubles next year, like on paper. And so it goes from 7 states to 19 states. But it doesn't talk about density. So we could get more density within those states. And I think, again, like we've got the wind in our sails versus, trying to still feel around blindly and got lucky with a couple of these enterprise agreements.
And through all these silos of the business, obviously you're gathering a ton of data. How are you using that data and are you able to monetize it in other ways?
Yeah, so today we're just really focused on organizing it properly so that the individual owner of that data can access it. I think there's huge opportunities to provide operational data towards lenders. Like we talked to all the big banks who have programs for lending for mortgages for farmland. And it's based on, well, how much land do you have? And that's how we'll lend. But imagine if you had access to this soil data for risk management perspective. So although we're not quite there, and it'd be forward looking to say, hey, we have these new product ideas. I mean, Bill coming from Rogers and being on the board of the TMX and understanding that the most valuable businesses on earth are not service businesses, they're data companies, is definitely in our purview of where we're going to go. And you can see this year last year we had no engineers. This year we've got an engineering team of 12 developers, and we're investing a ton of time and resources into figuring out what those product opportunities are going to be.
You're seeing a lot of, or you have the ability to achieve significant organic growth after some of these acquisitions. On the acquisition side, are you expecting these multiples to expand, or what's your expectation in terms of some of the value of these companies?
So far, no, but like we haven't sat down deeply with like the $10 million type companies to like hash out like how does something get over the line. But I think like as our equity value increases and people see potentially Deveron as the natural public platform to really drive a soil health solution, like they want to be part of it. And everyone has been independent in general, so like working with this isn't selling to private equity and like retiring. It's like, hey, like let's build this even bigger than we have today. So yeah, from that standpoint, I mean, the only change I could say to deal structure is maybe people want a little bit more cash up front, which if you're a larger business, that would be fair. But from a standpoint of multiple, like anyone that's out there on the private side trying to buy these businesses isn't offering much more than 3 times EBITDA as it is.
We had some questions for the audience about who your main competitors are.
Yeah, so if I'm going to analysts, everyone would say, well, Farmer's Edge. And we would say, only because they're the only other public name in this sort of like digital agriculture space. I think our main competitors are, it's funny, like the chem and seed and fertilizer companies that have monopolies. They're all trying to build independent data silos. And what you have to believe is that they're biased. So at the end of the day, there will be a new company that will have a better opportunity to provide independent advice that's not tied to the sale of something else. So I think they're real competitors because they have lots of money, but the value proposition is very different. And then it's still like, it's a bit of time. People in ag are slow, right? Farmers say, well, it feels like it worked well last year. So that's just a bit of the strategy of buying these local companies where they go to church with these growers and they played high school football with these people. So they already have that entrenched relationship. And then I think the other the other thing that's actually been a real positive is fertilizer prices. So again, fertilizer has tripled this year. So everyone's saying, Jesus, how can I make better decisions? Well, you need soil data. And there's lots of companies that are doing magical algorithms on once you have the soil data, but there's no cheap way to actually get it. And that's where we have this, kind of modern day railroad for agriculture of this rural labor force. We can get to farms cheaper than anyone else, which provides then downstream monetization opportunities. So I think we've got this really unique perspective. There's obviously competitors out there that we think about, but from a standpoint of like the holistic offering, I think we're really unique just because we don't sell inputs, and we're really focused on like that pure analytical advisory work.
You mentioned that some of these farmers are a little bit slower to move, but there's a question from the audience about how much resistance they have on spending money on your sort of technology, and if they're willing to accept these advantages. How has that dynamic changed over the last little while?
It's changed completely because most of these people, if you're a large land person, you rely on agronomists today. Like you don't know the 15 different chemical choices you have, and a lot of them pay these people, $20 to $30 a year on an acre basis to provide that advice, much like a financial advisor. And so now that we've kind of like cracked the case and like acquiring them, it's less of a pushback. And obviously, honestly, with fertilizer prices being where they are, everyone's going like, oh my God, I should have soil sampled sooner. And we're turning down business because we just don't have capacity, which obviously we'll invest on in the future. But yeah, that's 5 years ago when we first started. God, people would look at me cross-eyed and say, yeah, well, thanks for coming to visit. Like, we probably won't do anything. Whereas now I think over time, people digest that technology is more helpful. There's less snake oil. And then again, we're trying to leverage that local relationship a lot more, which is helping us, I think.
That's great. Well, I think that's all the time that we have for questions. I know there are a couple of audience questions, so we'll make sure that you get those emailed to you. But thanks for being here, and congrats on all the success you've had so far, and all the contracts that you've signed recently. That's great.
Great. No, thank you for having us. And I think back to the story, 3 years ago, maybe telling you in Whistler what we were trying to do. And it's like, okay, good luck. Now, now we're kind of here, and that's kind of exciting. So I appreciate you guys giving us a soapbox to talk.
Yeah, of course. Good to see you.
See you all. Bye now. Thank you.